Good evening, everyone. Welcome back to this discussion on audit. So, we have been talking about risk assessment and internal control, and it's been few sessions. So today we plan to continue with our discussion in relation to this risk assessment and the responses as around the risk assessment also. And hopefully we should be able to wrap up this complete discussion. Okay, so there are certain points around this risk assessment. There are certain concepts around this risk assessment that we are going to maybe sort of do a quick recap. Okay, once we are through with this, so that you can also establish the linkage amongst all of those topics that we have discussed in our previous sessions. Okay, so just to give you a quick brief as about whatever we have discussed. So we started our discussion in relation to identification of risk. Okay, and then we talked about the assessment of the risk. In relation to identification, we discussed what are the ways through which this risk can be identified. Okay, and of course, once this risk is identified, we also discussed what is it that the management will do. So management will bring in controls. Okay, that is what we called as internal control, or you can say the internal control system, which are set up by the organization to take care of the risks which may exist within the entity. Okay, and once the auditor will get into this complete understanding, this risk assessment, this risk evaluation, or you can say the control understanding, that is when the auditor will get into a walkthrough. Okay, remember the walkthrough means auditor will just go through some of the samples, or you can say some of the examples to understand or to make sure that whatever he has understood is correct. Yeah, and once that part is completed, that is when the auditor will get on to the next step, and that is about testing of those internal controls. Okay, so we touched upon this point in our previous session, testing of internal controls. So today we'll wrap up this discussion as around the internal controls as well. But before we get into this, it's important for you to understand what is it that the auditor will do in respect of internal controls as far as its testing is concerned. And in relation to these internal controls, there again, we can say there are certain categories of the internal controls. We can say there are certain types of the internal controls that we need to understand, basis which auditor will be able to conclude his testing, you can say, as far as this internal controls are concerned. Okay, so I'll just quickly take you to the presentation. All right, so when we talk about testing of controls, so what does it mean? What does it include? In a very simple and layman terms, we can say that now the auditor will go beyond the inquiries. Now the auditor will go beyond the discussions. Okay, of course, these inquiries can continue, but he's not going to get limited to all those verbal discussions. He'll now get into the checking. Okay, but the checking will not be in respect of various details, various working files, various supporting documents. No. What is the thought process of the auditor? That he will test that all those controls which the management had explained to him in terms of its design as well as its operating effectiveness, whether it's in place or not. And that's why, what is it that the auditor will do? Auditor will pick up samples from various processes. For example, sales, auditor will pick up samples. From procurement, auditor will pick up samples. From capitalization, auditor will pick up samples. Now, how these samples will be selected, what is going to be the number of samples, what is going to be the criteria, that is a separate discussion altogether as far as sampling is concerned, and that is something which you are going to cover later. As of now, we need to understand that these samples which will be picked up by the auditor will be in relation to the controls that are required to be tested. Okay, to make sure that all of those controls are in place and they are operating effectively, auditor will now look into the documents, will look into various types of supporting documents which are relevant in relation to each and every control. So that's why we can say auditor will get into the inspection. Means he will check those documents. Of course, inquiries will continue in relation to the documents that he will check. Auditor may also require to reperform some of the workings. For example, let's suppose on depreciation, he may want to recompute that on his own. Yeah. So we are not saying that auditor will support the management. Auditor will just check on his own whether the working which has been prepared by the management over which certain controls have been placed, whether that is coming out in an appropriate manner. Yeah. Now, when it comes to the testing of the control, there comes another very important point, and that is about the types of internal controls. Now, in relation to internal controls, there are a lot of points we have discussed so far. We have discussed about the meaning of internal control. Then we also got into the details about various types of controls. What are the components of control? Remember all of those points, huh? But now, when it comes to the internal controls, we can further say that internal control could once again be of two types. Okay. And this is going to be really relevant in the context of our understanding of the business as well as in the context of testing of internal controls. So let's spend some time on this and then we'll get back to our discussion on testing of internal controls. Now, in relation to a company, and today, as you all understand, that the companies are working on a model where the things are not carried out in a manual manner. Yes or no? Quickly, please confirm. Quickly, yes. Yes, I'm waiting for responses. In today's world, whether you talk about a small company, medium-sized company, or large companies, can you think of a company which will have all of its activities, all of its procedures carried out in a manual manner? Tell me, what do you think? Quickly, huh? Quickly, over to you. Quickly. Yes. Do you think it is possible for an entity to have all of those activities carried out in a manual manner? Or you believe some sort of involvement of technology will be required? Yeah. So that setup, that information technology usage is a must, or you can say that is a given thing. That is something which you'll usually find in almost every organization now. Yes or no? Yeah. So I can see a lot of responses from your side. Amar, Tejaswin, Bhavna, they are saying yes, technology is required. And this is where we now need to segregate the entire business framework, or you can say the organization, into two types. I'm not talking about the controls really, I'm talking about the organization. So we can say that in relation to every organization, the overall system could be of two types. One which is manual and second which is automated. What do you mean by automated? Something which is driven by the technology, whether you call it as information technology, whether you talk about any sort of usage of information system, or whether we talk about this AI. Yeah, all of these aspects, which is something which is driven through the technology and wherein the manual intervention is not required. So let's take an example for this. Now, let's suppose an organization records the purchases for which they have a system that every time some material will be purchased, so what will happen? Hard copy of the invoice will be required. Let's suppose that's the system. Okay, signed hard copy of the invoice will be required. So if the organization has to receive that, it will go through various approvals, it will go to the payment processing. Then what do you call this system as? Should this be called as a manual system or automated system? Tell me, what will you call this system as? Manual or automated? Over to you quickly. Manual or automated? What will you call this system as? Manual or automated? Manual or automated? Yes, quickly. Yeah. So therein I can see a lot of responses of Pallavi, Mehak, Tejaswin. They are all saying it's manual. All right. So now let's talk about the same organization. Okay. Now they have a system that once the invoice is in place, and if the accounts will approve that, okay, which is required to be done through ERP. ERP, you can say, is the information system of the organization. So once the accounts will approve the invoice through an ERP, so let's suppose hard copy is required, but they need to click a button that yes, now this invoice is approved after passing the accounting entry. So what will happen? Its payment will automatically get processed. So no manual intervention is required. Yeah. So the instruction will go to the bank and the bank will process the payment. Now, what do you call this second part of the system as? Do you think this is manual or automated? Tell me. What do you think? This is manual or automated? Tell me. Yeah. So Dipali says it's automated system. Now, in every organization, this is what you will get to see. They will have some processes, they will have some activities which will be carried out in a manual manner. Yeah. And there will be some activities, some processes which will be carried out in a automated environment, automated system. Correct? And depending on these two types of systems, what will happen? There will be the risks which are attached to those systems. Yes or no? So now what could go wrong is required to be looked at in respect of the process, system, activities, transactions. So if the system is manual, so what could go wrong? And the controls around that are also required to be looked at the same way. And in relation to all the risks which the organization may have, some of the controls could be manual and some of the controls could be automated. Exactly similar to what we have discussed. Yes or no? Some of the controls could be manual and some of the controls could be automated. Now let's try to understand what do you mean by manual or automated. For example, if we talk about same activity that we just discussed. Now in this system, company had a control. What was the control? That invoice will be received in hard copy and this will require approvals. So all of these things are done in a manual manner. So that's why, what will you call this type of control as? Manual control. Manual control. Yes or no? Now, there is another control which is established and which is automated. Now, what is the control? That once this invoice is approved by the accounts department, once this invoice is approved by the accounts department, only then it will go for payment processing, and which is done through a system. And after that, the payment processes will go through various levels, but that is all automated. Okay, no sort of manual intervention is required. So that's why, what will you call that type of control as? Should that be called as manual or automated? Tell me, should that be called as manual or automated? Over to you quickly. Should that be called as manual or automated? Yes, over to you quickly. Manual or automated? Yes, quickly. Huh? I'm just waiting for a response. What will you call those types of controls as? Manual or automated? Okay, great. So I can see Pranav saying it's automated. Pallavi saying it's automated. Great. Now, in respect of these two types, now have you understood the types? Okay, so we have got two types. What are the types? Manual system, because of which risks may arise and for which controls could be manual or automated. Similarly, automated system, for which risks may arise and for which controls could be manual or automated. Yeah. So this is what we call as automated environment, or you can say a part of the organization which is automated, means which is driven by the technology. Now, what does it include? Yeah. Or what are the features? I think we are all familiar with this. Yeah. So there will be faster processing of the information. Yeah. Accuracy will increase, no doubt. Yeah. And of course, if the Systems are automated. Those are generally automated. Why? To handle large volume of transactions. There will be integration between various activities. Okay. Human intervention will be limited. Yeah. So all sort of benefits are available. Yeah. All sort of benefits are available. Now this automated environment will include everything which is in relation to information technology, information systems. Okay. Whether you talk about local, IT systems. Okay. Whether you talk about desktop, servers, applications, okay, cloud server. Yeah. Whether you talk about any sort of interface. Yeah. All of these are part of what? They are all part of that system which is automated in the organization. And for that system, once again, a lot of risks may arise. Now, what are the risks? Maybe the system is not processing the data in a correct manner. Something which is automated doesn't mean that this will always produce the right information or the right output. Yes or no? There can always be errors over there. Yeah. That data, even though it is automated, somebody may get an unauthorized access to that, which is prone to misuse. So that's why it's a risk. It's a risk. Yeah. Yeah. If you don't upgrade, if you don't make the changes, then what will happen? What will happen? So let's suppose if you are using an old set of computer, okay, very old version. So what will happen? Can you tell me what will happen? If let's suppose your mobile is very old, you have not changed that, you have not updated that, then tell me what is the risk? What will happen? Over to you. I think everybody will be able to answer this. Yes, quickly, huh? Tell me what is the risk in such a case? What can happen in such a case? Over to you. Tell me what is the risk? Let me just quickly get on to your responses. Yeah. So now in such a case, the risk is what? Like Dipali mentioned, that the processing may be slow. Yeah. Jiral says there could be a security risk. Yeah. Aisha says the system may not work properly. Yeah. And of course, the system may go down at any point of time. So there could be a loss of data. Yeah. Amar says it's a small prone to malware or any sort of risks, viruses, etc. So that's why all of those risks will also get attached, even if the information technology is being used. So we can't say that because it's automated or information technology is used, so that's why the risk will not arise. Of course, it will be a different category of risks, but risks are going to arise. So that's why, what is it that we are required to do? We are required to bring in controls in relation to these type of risks as well. In relation to these types of risks as well. Yeah. And that is what you call as IT controls. Now, in relation to this, we can broadly categorize these controls into three types. So first is the general IT control. Now, what do you mean by general IT control? As the terminology suggests, general IT control means it's all about the infrastructure. It's all about the IT systems. Okay. Something which will apply to IT system as a whole. Okay. Which could be in relation to the policies and procedures which the organization will have in relation to its IT systems. So we are not talking about any particular application. We are talking about overall IT infrastructure. Okay. Something which could be there in relation to the network. Okay. So let's suppose the network is being used. Something which is in relation to the data center. Something which is in relation to the security of the entire IT infrastructure. Okay. Something which is in relation to the acquisition, development, or maintenance of application systems. Of application systems means at a broad level, when you look at the IT or the information system, so the controls which are put in place to take care of that IT system is what you call as general IT controls. For example, let's try to discuss some examples around it. Say, for example, if let's suppose a company has got an IT system, okay? Now, in relation to an IT system, what could be a risk to a company? What could be a risk to a company? There's a risk that tomorrow, if there is a earthquake, let's suppose tomorrow, if there's an earthquake, so what may happen? That entire IT infrastructure will be lost. Yes or no? Yeah. So that's why what can be the control to take care of this? A backup is required to be created. So you'll create a backup. Do you understand? Backup of systems is required, backup of data is required. Many a times we use this, many a times we do this. Yeah. So what is that backup? So that backup is nothing but a control which has been put in place. So now how can you put a backup for this? For this entire IT infrastructure, there can always be a disaster recovery plan. Okay, disaster recovery plan means, let's suppose if there is any such risk. So we are not saying that earthquake is something which is going to arise every now and then. Yeah, of course. It's not something which is going to arise every now and then. But if let's suppose such event happens, then what is the control? That is what you call as disaster recovery plan, for which company will create a backup and backup at a completely different location to take care of such type of risk. Okay. Now, similarly, when it comes to the network, in relation to the network, if let's suppose there is anything which goes wrong, so what are the controls which the company has put in place in relation to the entire infrastructure? Okay. Now, another type of control which could be seen in case of a company is about the application controls. Now, what do you mean by application controls? Application control means those controls which are in relation to a particular application. For example, edit checks, validation of data which is being used to process some information. Okay, so data which you input. Yeah, many a times you may have seen that there is a sequence number check, that 1 2 3 4 5 6, this is how the sequence should go on. Okay, many a times you may have seen that for a particular information there is a limit which is attached. Okay, let's suppose if you use any program, a limit is attached that only 3 users can access that, or only 5 users can access that. If it will go beyond those 5 users, this cannot be accessed. Okay, so user limit checks. Yeah, mandatory data fields. Many a times when you fill some information, when you use some apps, so what will happen? You are required to put in some information. Okay, and let's suppose if you don't want to fill the entire information, so there are certain fields which are set as mandatory. If you don't fill the information, it will not process. Have you seen this or not? Does it happen or not? Many a times when you will fill a form, for example, okay, that is what? That's an application. If you don't put down the minimum required information, the form will not be submitted. Does it happen or not? Tell me quickly. Tell me quickly. Does it happen or not? Have you seen this happening or not? Quickly, over to you. Do you see this? Yeah, so in relation to such type of application, have you come across such type of situation or not? Tell me quickly. Yeah, yes. All right. So now, whenever we are talking about such type of situations, like Rati Malini says, in some websites, they require information. Okay. Bhavya says, yes, this is of course required. Now, this is what you call as a check, or you can say a control which has been put in place. Now, what is the objective over there? Can you think of as to why that minimum information is required to be filled in without which you cannot fill the info, without which you cannot submit the form? That's a check. Why? Because if, let's suppose, limited information will be processed, then its output, the report which will get generated, or let's suppose for its processing, certain errors may arise. So that's why the system will restrict you at that point of time. Okay, it will not allow you to move forward. Yeah, and this is not in relation to the entire infrastructure. So do you see this happening in case of entire infrastructure? The answer is no. This is all specific to a particular application. Specific to a particular application. Yeah. So this is what you call as application control. Means controls which are in respect of certain applications of the entire infrastructure. But we are not talking about general IT controls. We are talking about specific applications over which controls are put in place. Okay. Then comes another type of control, and which is called as IT dependent controls. Okay. IT dependent controls, you can say it's more of a hybrid. Hybrid in the sense, yeah, they are basically manual controls that make use of some form of data or information. So let's suppose to apply some manual controls, if you require some information, if you require some data, on the basis of which that manual control will be applied, then what do you call it as? Controls which are dependent on IT. Controls which are dependent on IT. Yeah. Even though these controls are performed manually, they are dependent on information from the IT systems. That's why if the information from the IT system will be incorrect, so what will happen? Their effectiveness will be impacted. Their effectiveness will be impacted. Okay. So we can broadly say that there are three categories into which these controls can be segregated. But please remember, whether we talk about three categories or four categories, we need to understand this conceptually, that what is it that we are looking at? We are looking at controls. Okay. So our idea over here was to get into the controls, to get into the understanding of the controls which are put in place. Okay. Now, let's try to look at this chart. And in this chart, there are a lot of points which are covered that we are going to talk about. And we are also going to interrelate all of these points. Okay. And this is really going to help us as far as our understanding over a lot of points are concerned. All right. So now, if you look at the first part, okay, over here, it talks about risk assessment. Yeah. Do you know about risk assessment? Of course. What does it involve? Identification of significant accounts, disclosures, wherein you look at the data, you'll also look at the situations. So that's why it could be qualitative or quantitative. Yeah. You will also look at the assertions. Remember assertions we discussed? Yeah. You'll look at the sources which may result in some errors. And you'll also look at the risks which may arise from usage of IT systems. Okay. And then what will you do? In relation to all of these risks, you will obtain an understanding. You will evaluate them. So what will you do? You will understand the processes. Yeah. You will also get into the risk control metrics. Now, what do you mean by risk control metrics? Against various risks, controls are mapped. You can say it's a one-to-one mapping which is done in relation to risks and the controls. That is what you call as risk control metrics. So it's a kind of document which is prepared. Okay. And then you will perform a walkthrough. Walkthrough, you remember we discussed Walkthrough is all about getting on with that particular sample. Okay. And then you will try to get into the depth of various types of controls. Okay. So it's all about understanding and the evaluation of the controls which are in place. After that, what will you do? After that, you will get into the testing of internal controls. Now, please remember, we are not discussing all of these points in the context of IT controls or manual controls. Over here, through this chart, okay, our objective is what? To understand the linkages. And you can also say that it's broadly a recap of whatever we have discussed so far in relation to a lot of areas that we have covered. Now comes the next part, and that is about testing of controls. Test for operating effectiveness means we will test the controls as to whether they are operating in an effective manner or not. Because if you talk about a control, okay, for which design is in place, can we say that such a design will be of any use if the controls are not operating effectively? Over to you. Can you please quickly answer this? Tell me quickly. Quickly, huh? Yes, I'm waiting for response. So let's suppose if the organization has a control in terms of its design, means it's been documented somewhere. But practically, when you go and check, when you look at that, what do you find? Practically nothing is happening. So Amar says that is of no use. Tejaswin Pallavi say they are of no use. Yeah. So that's why what is going to be the objective of the auditor? Objective of the auditor will be very, very clear. To check whether those controls are operating in an effective manner or not. Yeah. Deepak also says the same thing. Okay. Raman, I think he has the same point. So he's saying, sir, that is of no use. Exactly. So that's why we will now get into that same point once again. That whether our environment involves manual systems, automated systems, risks are going to be there. And for those risks, the controls could be manual or automated. Now, whether those are general IT controls, general manual controls, application controls, whatever that is, we need to test them. And that's why whenever the auditor will get onto the testing, whenever the auditor will get into that assessment, what is it that he'll do? He will be required to test both the things. Can we say that the auditor will only check the manual controls and not the automated controls? Or he can check only the automated controls and not the manual controls? Can we say that? Do you think that will be appropriate on the part of the auditor? What do you think? Quickly, huh? Over to you. I want everyone to answer quickly, please. What do you think? Will that be appropriate on the part of the auditor? Ratimalini says no. He should check both. Exactly, because till the time he has not tested all the controls, what level of comfort will he draw? Nothing. Yeah. And let's suppose if he misses out on testing of some of the controls. So let's suppose an organization has got 100 controls. Auditor has tested 90, 10 he has left. So will that work? No, because those 10 may result in significant deficiency, significant errors as far as the financial reporting is concerned, or their impact on financial statements are concerned. So that's why over here, auditor needs to ensure that the samples he is going to pick up, the procedures he is going to perform, will take care of all the controls which are in place. Now you may be thinking, sir, what if the organization has got 1000 controls? What if the organization has got 5000 controls? See, when it comes to the samples, so what will happen is one of the sample will take care of a lot of controls, lot of risks. So it will not happen that for each and every control, for each and every risk, one sample will have to be picked up. No. So one transaction will be subject to a lot of risks. And for that transaction, for that activity, various controls are going to be mapped to that. And by testing that transaction, automatically all of those risks, all of those controls against those risks will get tested. And that is what is required to be looked at by the auditor. Okay. Now, in relation to the control testing, one thing which we need to remember is that over here, the objective of the auditor is not to get into the working files. Okay, so the objective of the auditor is not to get into the substantive testing. I'll also talk about substantive testing as to what do you mean by substantive testing. You can just simply say that auditor is not doing a detailed checking in a way right now. Auditor is only limited to one area. And what is that area? Whether the controls which are in place are operating in an effective manner or not. Understood? As simple as that. So this is going to be the objective of the auditor. So let's try to understand this further, yeah, with the help of this flow chart. Okay, so we'll just try to look at this flow chart. Now, in this case, we are discussing about this situation right now. Only and only this point, testing of controls. Now, from the testing of controls, only two outcomes are possible. Let's try to discuss those outcomes. Now, what could be those outcomes? Either the controls are operating in an effective manner or not. Yes or no? Yes or no? Tell me quickly. Either the controls will be operating in an effective manner or not. Tell me quickly. Do you agree with this? Yes or no? Yes or no? That is what the outcome of this testing of control is going to be. Yeah? Yes or no? So now, in relation to the outcome which the auditor will get, Afzal says yes. Auditor will decide about the extent of his testing. Now, what do you mean by this? And some of you may be getting confused. Some of you may be thinking, sir, what do you mean by testing? Because testing is already completed. Now, this is what you need to understand. Please remember that we were discussing about the audit planning. Remember that, everyone? Yeah, remember that. And in relation to the audit planning, we discussed that risk assessment is a very, very critical activity. So risk assessment effectively was what? That is nothing but an audit planning. That is nothing but an audit planning. Yes or no? Now, by testing of controls, and I'm just talking about only the controls, by testing of controls, what is it that the auditor is trying to check? Whether the controls are operating in an effective manner or not. No means they are not operating in an effective manner. So if the controls are operating in an effective manner, so what will happen? The comfort level of the auditor as around that particular entity will increase. Yeah. But if the controls are not operating effectively, so what will happen? Auditor will get very uncomfortable. Okay. So he will become uncomfortable in the sense that he will believe, or his thought process will be that in relation to the financial information which he will be required to check, in relation to the financial statements on which he is going to opine on, chances of material misstatement are higher. We are not saying material misstatement will be there. Chances will increase. Chances will increase. Yeah. So that's why by testing of controls, auditor is only looking at the next step, or you can say he is planning his next steps. What do you mean by planning the next steps? Auditor will check whether he wants to increase his testing or not. And this next step of testing is what you call as substantive audit procedures. Okay, so this is the second stage. Please remember, every time we get on to the audit, what is going to be the first step? Testing of controls. And after that, substantive testing will arise. It will never happen that the auditor will complete the substantive testing and then he will get on to the testing of controls. That will be inappropriate. Why? Because this substantive testing is something which will be based on testing of controls. Now, what do you mean by substantive testing? Let's try to understand this. And let's also try to understand as to how this is different from testing of controls. Okay. So what we will do is we'll take some examples to discuss both these things. Yeah. All right. Now, when it comes to the testing of control, so what will happen? Auditor will pick up some samples. Okay. So let's suppose on sales. Let's suppose auditor is looking at sales. Now on sales, what will he do? Let me just go to that working file. Just give me a minute. So let's suppose auditor is doing the control testing. So we are talking about the control testing right now. I think I can see this response from Anirudh. Very good. He's saying, sir, if the testing of control is done later on, means after substantive testing, that will be illogical. Why? Because testing of controls could have saved the effort of the auditor. Absolutely right. Very good. Yeah. Now, let's try to understand about sales. Say, sales as a process is getting tested. So now in relation to sales, let's suppose auditor has picked up a sample of 25. And in this sample, what is he checking? He is checking what are the controls which the management has in place in relation to the sales process. Okay. So that's why he will look at some sales transactions. Correct? He'll look at some sales transactions. Yeah. And in relation to those 25 samples or sales transactions, what will he do? He will check invoices. Means whether those are matching with the purchase order or not, sales order or not, whether those are approved at the appropriate level or not, whether they are meeting the accounting principles or not. He may also want to get into the terms and conditions in relation to the sales. Okay, terms and conditions for which he will get into the samples, or you can say contracts, sales contracts on a sample basis. Correct. Similarly, there are various other information which he can check. Yeah. So this is something which he'll follow in case of testing of control. Now, let's suppose if the auditor is comfortable, he found that controls are operating effectively. So what will happen? What will happen? Now he's into a situation wherein he believes that the control system of the organization is strong. Okay, he's saying yes, it's a very good organization, got good corporate governance, their control systems are very good. So that's why the second step which he was required to follow, whether it is about testing of details, means Even though he has looked at those 25 samples, he's not yet done. He's not yet done. Why? Because he may want to check more samples. Okay. And he may also want to look at the sales working. He may also want to get into the sales analysis. So what could be the analysis? Maybe the comparison of the current year with the last year. Analytical procedures. He may want to map the quantity which is sold with the records of the company. He may want to look into some more sales contracts. Yes or no? Now, why is that required? Because just by ensuring that the control system of the organization is strong, can the auditor stop over there? Can the auditor decide that he will not perform any other procedure? Tell me, what do you think? Just because the control system of the organization is very strong, can the auditor just drop down his remaining procedures? Will that be appropriate on the part of the auditor? Tell me, what do you think? Will that be appropriate? What do you think? Quickly, yeah? Bhavya says no. That will be inappropriate. Dipali says no. And why is that inappropriate? Or what do you mean by this? Very simple. That testing of controls is not something which is conclusive in nature. There's something which is over and above that is required to be done. And what is that over and above? That is what you call as substantive. That is what you call as substantive testing. In which case, there are two types of procedures which can be performed. One, over which you will get into the information, records, working files, etc. You will do the recomputation, you will do the reperformance, you will check the invoices, you will check the contracts. You may also get into some of the contracts reading. Okay, some of the things which you have already done in case of control testing, but beyond that as well. And over which the auditor will get into the substantive analytical procedures. So a combination of these two is what the auditor will perform as part of his next step. What is the next step? Means once the controls have been tested. Once the controls have been tested. Now the only point which we need to remember at every stage. What is that? The extent. So when we talk about substantive testing, so its extent will be based on what? Outcome of control testing. Outcome of control testing. And I'm just hoping that you're able to understand this aspect now. That how is this outcome of control testing will have any impact on the substantive testing, or you can say the testing which the auditor will perform. How is that going to be impacted? I'm just hoping you're clear on this. Any questions so far? Over to you quickly. Pratimalini says, sir, if the controls are operating effectively, then there will be a need for substantive testing. Exactly, that is what we discussed. Huh? And that is where everyone remember, yeah, they said yes. Why? Because if let's suppose the controls are strong, does it mean that everything will be 100% correct? No, still there are chances of error. And many a times those controls may also be overridden by the management. Management can always bypass that if they want to do that. Yes or no? So that's why even though controls are strong, still further testing is still required to be done. That cannot be ignored. And that's why, what do you say? that testing of control is not something which is conclusive in nature. Okay. And I think Anirudh has answered this. Yes, if the outcome of control testing is favorable, then the testing of this or the extent of this substantive testing can be reduced. Okay. Tejaswin is asking, sir, if the controls are strong, but the procedures followed by the auditor will be less. Am I correct? Yes, of course. Yes, of course. Now the question which may arise, and some of you may be thinking, sir, how do we decide as an auditor that what is going to be my extent now? Let's suppose controls are strong. So how do you measure that? How do you quantify that? So do we have any formula? Do we have any calculation? No. Please remember, these all are judgmental. Okay, these all things are quite subjective in nature, so there is no real formula which is available. Okay, that will again be dependent on the client that you are working on, situation that is involved, the risks which are attached to that. Even though controls are in place, but the risks which are attached to that, what has been your past experience if you have been the continuing client, huh? So all of those things are therefore required to be looked at. Okay. Then any other question as around this? Anyone quickly, please? Any question, any doubts that you may have? Quickly. Any questions, any doubts? Please let me know. Any questions, any doubts if you have? Quickly, please. In the meantime, I'll just take you to some of the regulatory requirements around some of these points that we have discussed. Okay. So I think Tejaswin is asking, sir, testing of detail one more time. Yeah, sure. See, testing of detail simply means that we are talking about working files. We are talking about data which is available. Okay. So for which you will do the reperformance. So let's suppose if depreciation is there. So you may want to recompute that depreciation. Okay, you may want to check the formulas. You may want to check the calculation. You may want to check whether the useful life has been taken in an appropriate manner or not. So all of these procedures are what? These are called as testing of details. Okay, clear on this, Tejaswin? Yeah? Yeah? All right, so now let me just take you to some of the regulatory requirements around this. See, so far, there are a lot of aspects around the risk assessment that we have discussed. We are not yet done, but as around the risk assessment for which we discussed that the control system should be in place, there are also certain regulatory requirements which talk about this. Okay, so if you look at the requirements of the Companies Act, okay, so if you look at the requirements of the Companies Act, in case of listed companies, okay, directors have a responsibility. Okay, so they come up with a statement, they come up with a document wherein it's laid down, okay, wherein they will specify whether the controls are adequate and whether they were operating effectively. Yeah. So when you talk about section 143 of the Companies Act, auditor's report will state, means auditor will be required to comment upon this as around the internal controls. So one, of course, we are talking about the procedures that the auditor will follow. But on the top of it, in respect of certain categories of companies, these are also in a way mandated to some of the companies. Okay. Now, if you look at this section 177, which is more of in respect of the audit committee. So audit committee, yeah, so to whichever entity it is applicable, they are also required to look into this evaluation of the internal control risk management systems of the organization. Yeah. Similarly, if you talk about the company, its independent directors are required to follow the code of conduct, which is relevant for the directors. And that is what, that is also in a way talking about the control systems. Okay, risk management system. Yeah. So idea over here is for you to just look at that some of these requirements are also coming from the regulatory framework. over and above something which the auditor is always required to look at. And in respect of this automated and manual, generally you will see there's a lot of confusion. Generally you will have a lot of questions. Sir, what is this manual? What is this automated? I'm just hoping that you are clear on this manual as well as automated. Okay. And these days, as we are moving towards this technology, yeah, we are moving towards this technology. So that's why what do you get to see? You will get to see auditors are also making use of this technology. So we are not talking about the management systems now. We are talking about as to how the auditors are also using some tools, okay, some systems which are based on technology, which is also called as computer assisted auditing techniques. Okay. So for example, there are softwares which are available, which will guide the auditor as around a lot of procedures in relation to the audit. There are certain tools, there are certain softwares which are available, which will help the auditor in determination of samples, means selection of samples, means what should be the number of samples and which all samples should be selected. Yeah. Yeah. And there are certain tools basis which auditor will evaluate lot of requirements as we discussed. Okay. And when it comes to the digital audit, or when we talk about this data analytics for audit, these are all what? These are all, you can say, involvement of this IT, or you can say technology in relation to the audit which is required to be carried out. So that's why we can say that when it comes to the organization which is getting audited, or which is getting audited, of course that will be making use of the information systems. But when it comes to the auditor, the information system which he is using, the tools, technology which he is using, that is what you call as the computer assisted auditing technique, or you can say all of these data analytics, etc., which he is going to apply, or you can say the audit which is done more of in a digital manner, wherein the usage of digital technology is done by the auditors. Okay. So I can see this question coming from Srinivasan. He's saying, sir, can you please differentiate between internal financial controls, internal controls? See, as far as the audit of financial statements are concerned, something we have also discussed in our previous sessions as well. Every time when you look at the control, okay, so each and every control will not be something which will impact the financial statements. For example, let's suppose an organization has got a machine. Say they have infrastructure, plant, but that plant is not running at optimum capacity. If the management will increase the efficiency, so what will happen? Plant will run at the optimum capacity, because of which its production will increase. Now, this is more of an operational matter. So any risk around this, any control which is put in place in relation to this operational efficiency, this has got nothing to do with the financial statements. Why? Because it doesn't have any financial impact as far as the financial statements of the management are concerned. Why? Because if, let's suppose, during the year 1 lakh units are produced, that is what is going into the financial statements. If the management will produce 1,50,000 units, that will go into the financial statements. So there is nothing which is incorrect which is going into financial statements. So this is what you call as controls. Okay. But if you are talking about any control which is going to have an impact on the financial reporting, that is what you call as internal financial controls. For example, organization produced 1 lakh units, but the inventory is being shown only for 80,000 units. Yeah. Yeah. So if the control is not in place, so this is impacting the financial statements, financial reporting. That's the difference between internal financial control and the control which is not having any financial impact. Okay. So internal control is a broader term which will include both controls, whether those are impacting the financial statements or not. Yeah. But for the purposes of audit of the financial statements, what is it that the auditor is required to look at? Those controls which will have any impact on the financial statements. Beyond that, he can always advise, he can always recommend, but that is not something for which he is bound or the management will be bound. Understood? Yeah. All right. So now I think we can just move further. Now, in relation to this risk assessment, we've also discussed as to what is it that the auditor will do or how the auditor is going to address all of those risks. But there's one more ingredient to this. Okay, let's talk about that ingredient as well. I think we'll just move on to that part. Just give me a minute. I'll just get on to that part in relation to that risk assessment. Okay, so in a way, we are looking at some of the aspects in relation to risk assessment. And after that, we'll pick up some examples. All right, so now when it comes to the risk assessment, which is of course based on various risks which are in place, which is based on various controls which the organization will have. Every time the auditor will do a segregation of those risks. Or you can say, in relation to the financial statements, you can say financial statements is a list of various account balances, which the auditor will segregate into two parts. Now, what are going to be those two parts? One that is significant to the financial statements, and second, which is not so significant to the financial statements. Can anyone share any understanding as to how this can impact the financial statements? Over to you quickly. See, we have briefly touched upon this point in our previous sessions. Quickly, can you throw some light on this aspect of significant and not so significant account balances? Quickly, over to you. Significant and not so significant on account balances. Over to you quickly. All right, so Tejaswin says inherent risk could be there. All right. Srinivasan says materiality. See, materiality, I think we have not yet touched upon. So let's not get into that materiality. We are going to discuss about that materiality also in a while. Anyone else? Any more thoughts that you have as around this segregation? Okay, great. Aditi says, and I think it's a very nice answer she has shared. She is saying significant which does not impact or which doesn't have any significant impact on the financial statement. So if I have to put this in a layman term, this is how we'll consider this. I understand Virender has a query. Yes, Virender, what's the query? Virender, what's the query? Okay, so Damasai is asking, okay, so Damasai is saying stock account balance was sufficient. Okay, I think you mean to say significant. Yes, of course, that again could be a very, very relevant point in the context of financial statements. So let's try to understand about this part. And let's try to discuss this with the help of an example. Now, every time when the auditor will decide upon his audit procedures. Okay, so now what is the objective? Auditor will want to decide upon his audit procedures. Yeah, so that's what the auditor wants. So auditor will get on to the risk assessment, for which he will understand about the entity, about its environment, about internal control system. There are a lot of things which he'll do. Okay, all of those things we have understood. Now, on the basis of all of these understanding that the auditor would have obtained, what will happen? He will get a lot of insights about the company. He will get a lot of insights about the account balances, about various line items of the financial statements. And he will get a lot of insights about the potential impact which could be there on those line items in the financial statement. So let's suppose in the balance sheet, there's a line item inventory. There's a line item PPE. There's a line item other current assets. Okay. Yeah. Let's suppose these are the three line items that we are talking about currently. Now, auditor believes it's a manufacturing company. And that's why this is a risky item. Means it is subject to risks. Why? Because its valuation could be a problem, its existence could be a problem. Yeah. So there are a lot of problems which are possible, means what could go wrong in relation to this particular item. And that's why what will the auditor do? Auditor will mark this. You can say he will mark this as a big ticket item, or you can say something which is a significant account, or a significant account balance. Yeah. Then he'll look at, let's suppose, other current assets. So what does he find? That this includes a lot of receivables which are in the nature of statutory balances, etc. But he didn't find those to be really relevant or prone to a lot of risks. So that's why, what did he do? He marked it as not so significant, or you can say not significant. And he looked at the structure. He looked at the capex. So he found that the company has been increasing the capex significantly. And in relation to the capex which has been increasing, chances are that there could be errors in this particular account balance as well. So that's why this item has also been marked as significant by the. Now, let's try to understand as to what is the relevance of marking these two items as significant. And what is the relevance of marking this particular item as not so significant? Significant, in a very simple term, we can say, is something which can impact the financial statements in a significant manner. You can say something which can impact the financial statements materially. So there's a significant risk which is attached to these two line items. So that's why what will happen here again, irrespective of whether the controls are strong or not. Okay, so let's suppose if we talk about that stage of control testing, wherein either the controls are operating effectively or they are not operating effectively. Remember, that is what we discussed. Now let's suppose even if the controls are operating effectively, still this segregation will be done. Still this segregation will be done. What is going to be that segregation? What are the items which are subject to significant risks? And what are the items which are not significant? And can you tell me what will be the impact of this? Any thoughts that you may have? What is going to be the impact of this? So how is this going to impact the auditor as far as his procedures are concerned? Over to you quickly. What is going to be the impact on the audit approach? I think everyone should be able to answer this. What is going to be the impact on the audit approach because of this? Quickly, over to you. How is this going to impact the audit procedures, audit approach of the auditor? Tell me quickly. Ranjita says substantive audit. Okay. Anirudh says timeline and the efficiency in audit. So I think we are trying to discuss a situation wherein, because the items are subject to significant risks, so that's why what will happen? They will be subject to more testing. Auditor will want to perform more testing over here. Yeah. So the extent of testing will always be impacted by the control systems. Okay. At the first place. But at the same time, whether the controls are strong or not, keeping that factor as a separate factor altogether or keeping that aside, the account balances which will be subject to significant risk, yeah, will require more testing, will require significant audit procedures as compared to not significant one. Yeah. Now you may have a question that, sir, what does it mean that for significant account balances, testing of detail and analytical procedures both will be performed, and for not significant items, one of them will be performed or nothing will be performed? There again, it's going to be quite judgmental. It may happen that for both significant as well as not significant, testing of detail as well as analytical procedures are performed, but the extent will be cut down. And it may also happen that for not significant account balances, auditor may decide only to perform testing of detail or only to perform substantive analytical procedures. So that is again going to be quite judgmental. Okay, that will be dependent at the first place from the comfort that he derives from this control system, and on the basis of risk assessment that we would have done, on the basis of which he will decide whether these are significant and not so significant. And accordingly, what is it that he'll do? Accordingly, he will decide his audit procedures. Okay. Accordingly, he will decide his audit procedures. All right. Clear on this? Yeah. So I think we can take up some examples with the help of which we'll discuss this. Okay. So I think we can take up some examples with the help of which we'll discuss some of these points. Just give me a minute. All right. So some of the points that we have discussed so far, let me just move on to some examples now. Okay. Zomba Products Private Limited is a small company. Okay. The control systems in the company are rudimentary. How you as an auditor of the company would proceed to evaluate internal controls of the company? Over to you. Quickly, over to you. Yes. Quickly, over to you. Quickly. Yes. What is your response? Please remember, it's a small company. Yeah. So that is something which you need to remember always. And in the context of small company, you need to answer this. Okay. It's a small company, and accordingly, you need to assess its internal control system. Yes. Let me just see what is your response here. All right. So Srinivasan says segregation of duties. No, so what is it that you will require? So can you please elaborate? Maybe some of the words you have been sharing, it's not very clear. So Tejaswin says testing of detail will be followed. Okay. But I think we are talking about evaluation of internal control system. Bhavna says internal checking. So what do you mean by internal checking? Then Bhavna says thorough risk assessment will be required. Okay. Anirudh says inquiry should be done. Then the narratives, of course. So I think he's just talking about the way this discussion will happen. And after that, the risk assessment should be done. And then the observation and then the reporting. All right. Anyone else? Anyone else? Okay. Nitin says inspection would be required. Okay. Ratimalini says testing of controls. Karan, it's like very basic, huh? Very basic. Okay. Damasai says bring equilibrium between the internal controls audit and affordability by the small company. I would say a very, very relevant point. Yeah, so whenever you look at a company, whenever you look at the organization, in the context of that, you are required to look at its systems, its processes. Okay, so I think you are trying to understand the meaning of rudimentary. So this is mean. So this means very basic. Okay, you can say a very simple one, not very strong. Not very means significantly things are not in place. Okay, yeah. Bhavna says internal check means checking of internal details, documents. Okay, sure. All right. So now one needs to understand that the understanding of the organization is required to begin with. Yes or no? That is what we have discussed so far. Now, in relation to the small company, generally, what will you find? Generally, what will you find? That their control systems are rudimentary, means they are generally quite basic. Okay, as far as their design are concerned, you are not really talking about their operating effectiveness. Okay, and in most of the cases, you may not find that documented, because if you go and ask the management that please provide me the document, so they may not have anything. So this will all be verbal. So you go and discuss that with the management. And that is what you will be required to document. And that's why, how will the auditor evaluate that? Remember, evaluation of internal control, that will be done through narratives. That will be done through narratives. So that approach is what the auditor will have to follow over here. Clear on this? Yeah. Okay. All right. So now moving further. Okay. So let's take up this question. Yeah. So let's take up this question now. A chartered accountant during the course of audit of a company finds that cash is not deposited into bank frequently, although concerned staff of the company was required to do so. So you can say it was a check in place, but the staff has not been following that. Further, the official responsible for ensuring performance of above function has also not paid any attention to it. So what does it mean? Means at the first place, so there was a staff, say A was required to do some activity, so he has not been doing that. Then there was another person, B, who was required to review this, who was required to check this, whether A has been carrying out his activities in an appropriate manner or not. So what do you find? That this official responsible, who is that? B. Okay. So he is also not doing anything. Okay. He is not paying attention to it. Now, if let's suppose you happen to be the auditor of this company and you come across this situation, so what does it represent? Means from your perspective as an auditor. So let's try to understand as to, how will you approach this? What is it that you'll do? Okay, what is it that you are going to look at? Over to you quickly. Over to you quickly. Now, if you happen to be the auditor of a company, what is it that you will do? How will you approach this situation? What is going to be the thought process? Okay, Andrew says it represents that this line item needs substantial procedures because the internal control is not properly implemented. Then the testing of details and analytical procedures are also required to be applied to this particular line item. All right. Anyone else? Quickly, over to you. Anyone else? Any more thoughts that you may have around this? All right. So I can see this response coming from Aditi. She says there is a delay between the staff. So it requires internal control, but that is missing. So what do you do as the auditor of the company? So the control is clearly missing. So Bhavna says testing of control will be done. So let's suppose if you test the control, so what will happen? That you will find that to be operating ineffectively. Yes or no? So is that really going to be the objective when you know this is not functioning in an appropriate manner? So Nitin says it's a control deficiency, of course. Now, as an auditor, what will you do? Damasai says it's ineffective at the functional level and review level, both, and therefore it implies that the internal control was ineffective. Okay, great. Then I think Niketna says testing of control is required to be done. Raman says it represents internal control are not operating effectively and the audit comfort has gone in respect of the control system of the company. And therefore, he is required to test internal control in more detail. All right. Ranjita says not effective and efficient control does not happen. Questionnaires, detailed checking, I think that's the point. No worries. So let's try to look at this. Now, in this case, it's clearly evident. What is clearly evident? Control is not operating in an effective manner as per the design. Okay, so design is there, but operating effectiveness. Okay, try to use these terms. So when you say implementation, it's not happening, it's not functioning properly. So you can just replace those terms with these two. The more and more you do, the better it will reflect. Okay, it's not necessary. Please remember, it's not necessary, but as we have discussed, the more and more technical terms used, the better it will be. Okay, and because you are clear on the concept, so that's why I'm just advising you to do that. So it's very clear that design is there, but operating effectiveness is missing. Okay, it would not be able to prevent misstatement. Yes or no? If the control is not operating in an effective manner, so what will happen? If there is any error, so that error will get onto the financial statements due to this. Chances of occurrence of an error will increase. Chances of occurrence of an error will increase. And what do you call that error as? Misstatement. Yeah, so therefore, this will lead to what? This will lead to misstatement. Yeah. All in all, what do you say? All in all, you will say that it's a clear-cut example of control deficiency. Okay, so in a way, in the solution, what is it that you are required to do? Very, very simply, you are just required to elaborate this. So can you look at these 2 points? So what did we discuss? Design is missing. Sorry, design is there, operating effectiveness is missing, which may lead to misstatements. And that is what you call as control deficiency. So if you explain this, so what will happen? Your answer is there. Yeah. Are you clear on this now? Any questions, any doubts that you may have? Quickly, please. Then we can take a break. Yes, over to you. Any questions, any doubts that you may have? Please let me know. And after that, we'll take a break. Okay. So I understand Bhavna has a question. Yes, Bhavna. In the meantime, let me just look at some of the questions. Uh, I think Tambeshwari is asking 21 explain. 21, what do you mean by 21? Are you talking about this example we just discussed? All right, so let me just go back to this question once again. Okay, this one, huh? All right, so in this case, there was a company for which the control systems were not in place. You can say those were very, very basic. Okay, so now if you were the auditor of this company, how will you evaluate its internal control? So for evaluation of the internal control, if you remember, we discussed, you will go to the questionnaires, you will go to the checklist, you will go to the flow charts, narratives. Okay. So now when things are not in place, so what is it that you will have to follow? Narratives in most of the cases. Huh? All right. So I think we can take a quick break, huh? Maybe a short break of say 5 minutes, and then we can just continue. All right. So I think Nisarg, we can take a quick break. Huh? Nisarg, you are there? Nisarg, Ajit, you're there? Yeah. So we can take a break now. Huh? All right, so welcome back. So we can continue with our discussion now. See, as around this risk assessment and the responses which the auditor will plan as around the risk assessment, there's one more concept which becomes important, okay, and which is quite critical to this entire audit planning. So let's touch upon that concept now. We'll talk about that concept first of all. And what we'll do is once we are through with that, we'll pick up some questions to get into this detailed analysis of whatever we have discussed as around this complete part of the risk assessment and the internal control. I would say a very, very interesting concept we are going to pick now, materiality. Okay, materiality. We have not yet discussed materiality in detail, but of course, this term materiality, this term material misstatement, we have used quite often. And I'm just sure that everybody will have some clarity, some understanding as around this materiality. Okay, so before I really get on to the detailed discussion as around the materiality, can you just quickly help me understand what is your understanding of materiality? What do you mean by materiality? Over to you quickly, huh? Quickly. What do you mean by materiality? Tejaswin, I think I can come to your query maybe later on, huh? Yes. Materiality. So what do you understand by materiality? Tell me, anything that you know about materiality, which you believe should be the meaning of materiality? Great. So Niketna says it means significant. Great. Dilip says which will have an influence. Okay. Tejaswin says which is significant in nature. Okay. Bhavna and Dilip are saying which are quite important as far as the financial statements are concerned. And I would say this is exactly the meaning of materiality. Okay, but we'll just try to bring in some technical aspects in the meaning of materiality. There's no doubt when we are talking about materiality, we are talking about something which is significant, something which is quite important. Okay. Now, if you go by the technical meaning of materiality, what does it say? Any omission means any error, whether that error is intentional or unintentional. So that means no doubt we are talking about misstatement. Yes or no? So misstatement is what you call as an error, whether that is intentional or unintentional. Okay. Now that error will be considered to be material if that can, its impact is such, means if that error stays in the financial statements, if that error exists in the financial statements, then such an error could potentially, could reasonably be expected to influence the economic decisions of the users of the financial statements. That is what you call as material misstatement. So that means we are talking about something which is quite critical as far as financial statements are concerned. Okay. And that is the perspective with which we need to approach our entire audit planning as well. Now, there comes a question that this materiality, broadly, we can say that this is something which is significant. So does it mean that by materiality, we are only talking about something which is significant? Means, are we talking about only the quantitative aspect? Means, which will be driven by the numbers always? Means, in a financial statement, if we'll say anything above 1 crore, that should be the basis of materiality? The answer is no. See, materiality can be looked at by two ways. One, of course, which is driven by the quantity. But there are a lot of items in the financial statements which are required to be looked at on a qualitative basis. What do you mean by qualitative basis? Means wherein you will not limit yourself to the numbers. For example, if there is any statutory requirement, if there is any legal requirement, and that has not been fulfilled, okay, then irrespective of its impact, which in quantitative terms may not be very significant, still that may be considered to be material. Still that may be considered to be material. Examples: if you look at the requirements of Schedule 3, any item of income, expense which exceeds 1% of revenue from operations or rupees 1 lakh, whichever is higher, needs to be disclosed separately. Yeah. So one may say that this threshold is quite low. Still, because it's the statutory requirement, that's why if this is not properly followed, this becomes important as far as the presentation of financial statements is concerned. Okay. Now, in the financial statements, there is a requirement to disclose the notes. Now, what is the note? Shares in the company held by each shareholder holding more than 5%. So this disclosure is required to be given. Now, one may argue that maybe in terms of amount, this may not have any serious impact, but this disclosure is considered to be quite important. Means qualitatively, this is considered to be quite important as far as the presentation and disclosures are concerned. Okay, so that's why whenever we get on to the materiality, please remember, whenever we get on to the materiality, we need to look at both the aspects, quantitative as well as qualitative. Okay, now here comes the question that, sir, it is understood that materiality means something which is significant, which is quite critical as far as the financial statements are concerned. Qualitatively, quantitatively, both ways this is required to be looked at. But can you please explain as to, how do we reach this materiality, or what is this materiality? So this materiality, practically we can say, is a threshold. Okay, this is a threshold. Now, how does it work? So let's try to understand this with the help of an example, and then I'll come to your questions and queries around this. Now, as around this materiality, let us take an example of two types of companies. Okay, so at one place we have A Limited, another place we have B Limited. Now, turnover sales of A Limited is 10 crore. For B, it is 100 crore. Profit of A is what? 50 lakhs. Profit of B is what? 10 crores. Now, let's suppose if there is an error in the financial statements of A and B amounting to rupees 10 lakhs. Okay, so let's suppose if we are discussing about an error amounting to rupees 10 lakhs. Now tell me one thing, that whether this 10 lakhs will be material for A Limited's financial statements or not. Over to you. Over to you. Will you find that to be material for A Limited or not? Quickly, what are your thoughts? Everyone says yes. I think Niketna, Tejaswin, Anirudh, Ratimalni, they are saying yes. Great. So that means this amount you are considering significant for A Limited always. Correct? Now let's talk about B Limited. Do you think that this amount will be significant for B Limited's financial statements? What are your thoughts? What are your thoughts? I missed out on a lot of responses, huh? But as around B Limited, what do you think? Dilip says no. Tambeshwari says no. So now, in this case, we looked at an error, and the error was common for both the companies. Its amount was also similar for both the companies. But for one company, we are calling this error to be significant or material. For another company, we are calling this error to be insignificant or not significant always. So can you tell me, how do you decide about this? Or how did you decide? So did you know the answer? So is it that you were prepared for this question and that's why you have been able to answer this? So can you tell me what was the basis of answering this question? So how could you answer this? Everyone has answered this correctly, no doubt. But can you tell me, how did you reach this conclusion? How did you get onto this assessment? Quickly, quickly. Afzal says on the basis of quantity, of course. But what has been the basis of your assessment? What has been the basis? Ratimalni says, sir, we have looked at the value of sales and the profit. Yeah, Srinivasan says we have looked at the policy of the company, but the policy of the company is not specified. I have not discussed the policy of the company. So how come you looked at the policy of the company? So I think the way you have approached this assessment, one can say, is judgmental. Yes or no? Are we correct when we say that we have been judgmental? The answer is yes. And what has been the basis of our judgment? Financial numbers of both the companies. Yeah. Financial numbers, the financial data which is required to be audited for both the companies. Why? Because if we happen to be the auditor, for A, if there is any error of rupees 10 lakhs, that cannot be tolerated. That cannot be tolerated. Why? Because for A, even a difference, error of 10 lakhs will become significant. Why? Because its numbers are too small as compared to this error of 10 lakhs. But for B, such an error is quite acceptable. Is quite acceptable. If somebody looks at the financial statements with a revenue of 100 crore, wherein if 10 lakh is incorrect, that will not have any impact on the decision making of that stakeholder. Yeah, so that is not going to get impacted. Yes or no? So now this is how we get on to the assessment of materiality. And when do you assess this materiality? Please remember that this materiality is required to be assessed at the planning stage. So whenever the planning will be going on, this materiality is required to be looked at. This is required to be assessed. Okay. So now comes the question that, okay, that this error we could understood, that this error will not be material for A, sorry, will be material for A, but not material for B. But what is going to be the materiality for these two companies? So now, practically, if you are required to look at these two companies, so what will happen? Every time you will draw a line. Now, what do you mean by drawing a line? Means you will have to determine a threshold that has to be in quantitative terms. It doesn't mean you will ignore the qualitative aspect, but at least something you will do to begin with. Yeah. Now that threshold is what you call as materiality. Now that threshold could be determined on basis of various factors. There are various factors which can be looked at by the company for determination of materiality. So let's try to look at some of those factors. One very, very common factor, which is also called as a benchmark, which is used for a determination of materiality, happens to be the profits. Yeah, profits. So a certain percentage of profit PBT can be computed as the material. Certain percentage. So for example, if let's suppose you decide 5% of the profits, means whatever is the profit of the company, it's 5% you want to keep as materiality. Now this again, please remember, is judgmental. Now, what will become the factor for determination of this? The understanding of the business, the stability in the business. So if you talk about a company which has been stable in terms of generating the profits year on year, this benchmark could be quite appropriate, as against a company which has been running into losses, or maybe in some years there are profits, some years there are losses. Therein the stability is missing. So therein what may happen? Revenue may be considered to be a benchmark. Okay, maybe 1% of revenue is considered, or 0.5% of the revenue could be considered. Now, this is only an example, only an example. So don't get confused. That's how come we take this 5%? How come we take this 0.5%? How come you use this number of 1%? So these are all based on judgments, which the auditor will have to look at. Similarly, if let's suppose we talk about a company which is a startup, okay, which doesn't have profits, which doesn't have any revenue. So what will you do? You may pick up total assets as the benchmark, or you may pick up net assets as the benchmark. Yeah. So there are different benchmarks, or you can say there are different criterias which are available, on the basis of which this threshold can be determined. What do you mean by threshold? An amount is required to be determined. For example, for company A, an auditor may decide that 1 lakh will be the threshold. For company B, auditor may decide that 50 lakhs will be the threshold. Now, what do you call this threshold? As materiality. So, which will mean that if there is any error which crosses this threshold, then you will call it as material error. Any error for B which crosses 50 lakhs, that will be considered to be material error. Now, what happens if let's suppose a company has got a lot of errors? On an individual basis, they are all less than 1 lakh. But if you take sum total of that, that will cross 1 lakh. So will you consider that to be material? The answer is yes. So that's why it is said that whether it's an error on an individual basis or accumulation of errors, at both the level, it should not cross the materiality. Because if it crosses the materiality, then what is happening? There are material misstatements in the financial statements. Understood? And any questions so far? Any doubts so far? Quickly, we are not yet done. Materiality is something we are going to discuss more. But any questions so far? Quickly, over to you. Any questions, any doubts if you have? Then I think Uday has a question. Uday is asking, sir, if amount for B Limited is 50 lakhs, then? So I think maybe you asked this question earlier. So of course, in our example, this 50 lakhs threshold has been considered for B. So that is what has been determined as materiality for B. Okay. So this has been considered as the amount, you can say, or the threshold, you can say, for the purposes of assessment of errors. Because tomorrow, whenever any checking will be done, any errors will be found. So what will become the basis for the auditor to get on to the conclusion whether that error is material or not? This threshold, this materiality level. Okay. All right. So Anirudh is asking, sir, at which level is this materiality decided? At the planning stage. So before you start the audit, okay, that is when you get into this materiality. At the time of risk assessment, you can say. Okay. In fact, this entire audit planning is something which you'll do sort of, simultaneously in terms of a lot of activities you'll do. Yeah. So at the time of planning stage, you will also be determining the materiality. I think you have one more question. I'll come to that question slightly later. Anirudh, okay. So whether you change this or not, I'll come to that slightly later. Tejaswin is asking, sir, we have to disclose as per the requirements of Schedule 3. Then we have to disclose it in case of B limited as well. Yes, of course. See, when it comes to the determination of materiality, okay, whether we talk about 1 lakh for A or 50 lakhs for B, over here we are talking about quantitative threshold. But let's suppose if this threshold 50 lakhs has been set up for B. Say there is any error which qualitatively bothers the auditor. Why? Means there is a non-compliance of law, non-compliance of regulation. Or you can say statutory requirements have not been fulfilled. Okay. Now for that, auditor may decide not to go by this amount. Yeah. So that's a separate assessment altogether. And what has been the basis of that assessment? Qualitative. Yeah. But for a lot of other activities, a lot of other procedures that the auditor will follow, auditor needs some threshold. So tomorrow, if let's suppose some samples are required to be selected, which you are going to cover later in more detail in terms of your sample selection. Materiality will help the auditor in terms of selecting the samples. Yeah. Tomorrow, when the samples are tested, errors are observed. So how will the auditor get on to the conclusions? So if let's suppose there are 10 errors, all totaling to rupees 5 lakhs. So what should the auditor say? Is this material or not? So how will the auditor decide? This materiality threshold will help the auditor over there. Clear on this? Clear on this? Yeah. All right. So now, in relation to materiality, yeah. So one, of course, is the term which we call as materiality. Okay. I think Vaishnavi has a question. Let me just get on to this question before I move further. Vaishnavi is asking, sir, materiality is determined for financial statements as a whole or for some transactions or some account balances. See, it's determined for the financial statement as a whole. And that is then required to be applied to various line items of the financial statements, whether you talk about some of the account balances or some of the line items. Okay, so that is required to be applied in relation to those account balances. Materiality for the financial statements will be 1. Okay, now let's try to discuss another concept in relation to materiality. Okay, so let's suppose materiality for a company was 50 lakhs. Okay, so now over here, what is the objective of the auditor? That if there is any error or accumulation of errors, it should not cross 50 lakhs. Yes or no? Tell me, everyone, yes or no? Is that the objective of the auditor? Quickly, please. If there is any error or accumulation of those errors, it should not cross 50 lakhs. Is that the objective of the auditor? Yes or no? Quickly. I'm just waiting for a response. Yes or no? Afzal says yes. What about others? Tell me quickly. Do you think that's the objective? Great. So Vaishnavi, Niketna, Uday, Dilip, they are all saying yes. Great. Now, let's try to understand this point, and you'll find some problems over here. Now, in relation to the financial statements, 50 lakhs has been the threshold. Okay. So auditor is happy if the errors or accumulation of errors do not cross 50 lakhs. Correct? Yeah. I think we all are on the same page with this. Yeah. Sandhya is also saying the same thing. Very good. But tell me one thing, that such errors or such error, whether it's one error or a lot of errors, can only be those errors which the auditor will be able to identify. Yes or no? Yes or no? What about those errors which the auditor will not be able to identify? So auditor is trying to take care of the errors. How? Auditor is saying my threshold is 50 lakhs. I'll make sure that all the errors do not cross this 50 lakhs. But this assessment, this perspective of the auditor will only apply to those errors which he would have identified. How will he identify? He will do some calculations checking, he will check the records, he will check the working files. Okay. But what about those errors which will not come to the notice of the auditor? What about those errors which the auditor will not get to know? Tejaswin says, but sir, that's the inherent limitation of the auditor. Yes, there's no doubt it's the inherent limitation. We understand there are some limitations of audit, but tell me one thing, if the auditor wants to take care of those errors, what about those errors which he will skip, which he'll not come to know? And it's not that he's not trying to look at that. By default, the audit process is such that such errors will get missed. Anirudh is saying detection risk, and in relation to detection risk, we are talking about sampling risk in a way. Yes or no? So what about those samples which have not been tested by the auditor and they may contain some errors? So let's suppose we are in a situation wherein auditor has come across a lot of errors. Okay. And some total of those errors was 45 lakhs. So auditor is quite happy. So will you say that the financial statements are free from material misstatement? In this case, when the total of errors is 45 lakhs, tell me quickly. In this situation, will you call this as a situation wherein the financial statements are free from material misstatement? Yes or no? Yes or no? Quickly. The answer is of course yes. The answer is of course yes. Why? Because if the errors are less than 50 lakhs, then of course material misstatement is not there. Yes or no? Quickly, yeah, quickly over to you. Yes or no? Yeah, great. Uday Tambeshwari say yes. Very good. Now, even though this 45 lakhs has been taken care of by the audit, what does this 45 lakh errors indicate? Or what does it pertain to? It pertains to those areas which have been tested by the auditor and from which auditor could identify the errors. So auditor was happy in this situation when all of his errors or all the errors which he came across were limited to 45 lakhs. Now in this given situation, is it not possible that there is an error or there are some other errors amounting to 15 lakhs which exist in the financial statements, but the auditor has not been able to identify them? Is it possible or not? Tell me. Is it possible or not? Tell me quickly. Yes or no? Tell me, is it possible or not that there could be some errors which are there, but the auditor has not been able to identify that? Afzal says possible. Tejaswin says yes. Now tell me, in this situation, auditor was quite happy and auditor was about to give an opinion on the financial statements that they are free from material misstatement. But if he will take the total of these two, what does he find? The error is 60 lakhs, which is a problem. Now, to take care of such type of risk, so is it a risk on the part of the auditor? Yes or no? Tell me, is it a risk on the part of the auditor? The answer is yes. Is this intentionally done by the auditor? The answer is no. Answer is no. This is a limitation of the audit. So that's why every time whenever the auditor will determine the materiality, he will also determine another threshold. What do you call this other threshold? As performance materiality. Performance materiality. Now, what do you mean by performance materiality? Performance materiality, you can say, is always a number which is lower than materiality. Let's suppose this has been kept as 35 lakhs. Now, in this case, what is it that the auditor will do? Any error which crosses 35 lakhs will become a problem for the auditor. Why? Because auditor has given himself a cushion of 15 lakhs. Now, what is this difference between these two? This difference of 15 lakhs is a cushion, which the auditor has given to himself. Why? Because this 15 lakhs will take care of such type of errors, which may go unnoticed. Now you may have a question, but sir, how the auditor will be able to decide that this cushion should be for 15 lakhs, 20 lakhs? How will he get to know when he doesn't know about the errors? When the error is not to his knowledge, how will he be able to get onto that? See, you are right. Auditor will never be able to know about this amount. So that's why, what does he do? He gives himself some cushion to take care of some of those risks which may remain in relation to those errors which could be there in the financial statements, but which have not come to the knowledge of the auditor. Okay, so that's why whenever we talk about materiality, so there are two materialities which are computed or which are determined. One which you call as materiality, which is a higher number, and second, which is performance materiality, which is a lower amount. Okay. Now, what will become the basis for choosing this performance materiality? See, generally, a cushion of 20 to 30% is given by the auditor. Okay, I'm just talking about practical situation. Generally, 20 to 30%, at times 40% cushion can also be given. Now, what will become the basis of giving this cushion? That will be based on a lot of factors on the basis of the risk assessment, which the auditor will do. Means, what are the chances? How strong is the control system of the entity? Okay, so all of these factors are required to be looked at by the auditor, on the basis of which he will decide, yeah, as to whether the materiality is going to pick up, is it going to be 50 lakhs or 60 lakhs or 70 lakhs, and what is the cushion that he wants to provide in relation to that materiality. And after providing the cushion, the threshold that he derives, that is what you call as performance materiality. Okay, now There's one more aspect as around this materiality and performance materiality. Okay. And I will need your attention. A very, very practical example and very, very relevant. Let's suppose auditor started the audit. Okay. So at the time of the beginning of audit, what will the auditor get? A draft set of financial statements. Why do I call it as draft? Draft means it's not finalized. See, till the time it is not audited, it's not signed off, it's always a draft. Yeah. So let's suppose initially the profit number was 10 crore. Profit number was 10 crore. Okay. And materiality was determined. So this was based on draft financial statements. Okay. So this is how the auditor has started. And auditor took a benchmark. Let's suppose profit was considered as the benchmark. So 5% of the profit was considered as materiality. So can you tell me the amount of materiality which the auditor will take? If let's suppose 5% of the profit should be the benchmark. Yeah. So can you tell me the amount quickly? Huh? Can you compute this? So what is going to be the amount of the materiality? I'm not talking about performance materiality. I'm talking about materiality. Yeah? So if let's suppose 5% is the materiality, yeah. So Afzal, Tejaswin, they say 50 lakhs. Great. So that means materiality to begin with. Now please remember, we are into planning stage. We are into planning stage. So that's why what will be the amount of materiality? 50 lakhs. Okay. Now, a lot of procedures which the auditor will perform, samples that the auditors will select will be based on which amount? That will be based on 50 lakhs. Correct? Yeah. Now the auditor will be happy. Auditor will be happy to leave any error or accumulation of errors if that is below 50 lakhs. Correct? So let's suppose audit has started. Okay. And it's been going on. So audit has been progressing. Now during the course of audit, let's suppose there's a significant error which has been found. Okay. Significant error has been found. As a result of that error, what has happened? This profit amount has gone down to 8 crore. So this has gone down to 8 crore. So there were a lot of errors because of which profit of the company went down to 8 crore. Is it possible or not? Tell me. Is it possible or not? Tell me. Niketna says yes. What about others? Huh? Tell me. Is it possible or not? Anirudh says yes. It's possible. Now, what was the basis of determination of materiality? 5% of profits. Now, in this case, at the stage of planning, what was the amount of materiality? 50 lakhs. When the auditor began his audit process, he considered materiality of 50 lakhs. Now, the question arises that during the course of audit, during the course of execution, if there are some changes, should the auditor revise his materiality or not? Now, if the auditor decides to continue with the same percentage, what is that percentage? 5% of profit. So can you tell me what should be the amount of materiality now? Tell me, what should be the amount of materiality now? Should this continue to be 50 lakhs? Should the auditor be rigid on this? Tejaswin says no. Dilip says no. Afzal says no. Now, if we go by the same percentage, then this number will change to 40 lakhs. Correct? Yeah. And the moment you change this materiality, what will happen? What will happen? All these activities which were performed, auditor will have to reassess that. We are not saying re-performance of entire audit will be required, but reassessment will be required. Why? Because there could be a lot of errors which are below 50 lakhs and those have been ignored. But now that cushion of 10 lakhs is gone. Why? Because the numbers have got changed. So that's why, please remember, entire audit planning is something which is a continuous process. And if it requires any revision at any stage, that revision should be done. Okay, we can't be rigid. We can't just simply say that no, our planning was perfect. Okay, we spent a lot of time on our planning and the materiality was determined and that will remain frozen. No, if you do that, then what will happen? The overall objective of the audit may get defeated. Yes or no? Yes or no? Anirudh is asking, but sir, in this case, initially only there is a misstatement of 2 crore. Here the auditor should proceed further as the statements are not free from that misstatement as found by the auditor. So how do you know that the misstatement is only of 2 crore? We discussed that there were some misstatements which have been accounted for by the management, which resulted in the profit going down by 8 crore. Audit is not yet completed. There are a lot of other misstatements which may arise, which may also be there. 2 crore is something which has already been adjusted. Understood? Yeah. So we are not. So as an auditor, will you ever get to know each and every misstatement? The answer is no. And do you think each and every management will record each and every error which will come across? No, practically it doesn't happen. So a lot of small errors, management will say, please ignore. Because if the management will keep passing small entries on a daily basis or on a regular basis, how will this audit really come to an end? Understood? Yeah. So practically it may become very difficult. Okay. Clear on this? So now what we can do is maybe we can just look at some examples around it. Okay. Around this materiality. All right. So let me just take you to some of the examples. Okay. Now, one of the team members of auditors of highly capable limited. Okay. So that's the name of the company, highly capable limited, was of the view that materiality and audit risk are only considered at the planning stage of an audit. You are required to comment. Over to you. I'm just hoping that you are clear on this now. I think it's a very simple question. Tell me, what are your thoughts on this? What are your thoughts on this? Quickly, over to you. Yes. What are your thoughts? Quickly. Yes. So how will you comment on this? What is your thought on this? Niketana says, no, sir. Audit planning should be revised whenever necessary. Yes, of course, auditor needs to be flexible as far as the audit approach is concerned. Okay, so that rigidity cannot be there in the audit process. Okay, another example. CA Raja is auditor of Buildwell Forgings Private Limited, having a revenue of 25 crore. Company has been sanctioned a term loan of 50 lakhs from a bank. Means company got a loan of 50 lakhs. However, as at the end of the year, only 1 lakh was availed due to delay in procurement of asset. Means this limit of 50 lakhs got sanctioned, but the company didn't avail entire amount. Okay, so they didn't pick up this entire amount. Only 1 lakh was availed. Financial statements of the company do not disclose the nature of security against which loan has been taken. Schedule 3 of the Companies Act requires disclosure. You are required to comment that as an auditor, whether you will consider this non-disclosure as material or not, and why. Over to you. Over to you. As an auditor, what do you think? Whether this will be considered to be material or not? So how will you approach this as an auditor? What is your thought process? Over to you. Quickly. I think I can see your responses in relation to the previous question now. Maybe your responses are coming in a bit late. Okay, so Tejaswin says, sir, it's a statutory compliance. So that's why we need to look at it qualitatively. So that's why you should consider this to be material. All right. So what about others? I think Anirudh has a similar point over here. Uh, Dilip is saying this is material, of course. What about others? Quickly, huh? What about others? Okay, Afzal also says it's something which is material. Okay, then Damasai says it's not material because it involves only 1 lakh, huh? And this is nothing as compared to the uh, revenue numbers of the company. Okay, Niketna says yes, sir. This disclosure is mandated by the Companies Act. Now, please remember, we are talking about a statutory requirement of disclosures. Okay, so every time when you look at the materiality, it will not be driven by quantitative factors. Okay, so every time you will not go by the quantity. Okay, to say that this is only 1 lakh as against this size of the company, your assessment could be correct. But what about the qualitative factors? How can you ignore that? Because something which is mandated to be done, irrespective of the size of the company, how can that be ignored? So that's why this is required to be considered by the auditor. This will be considered to be quite important as far as the presentation and disclosures in the financial statements are concerned. Okay, clear on this? So I think we can look at some more examples now. Okay, so in relation to some of the things that we have discussed, so what I'll do is I'll just try to pick up this case study. Yeah? So this case study comes from your study material only. So maybe what you can do is you can just also open your study material. We'll just discuss this case study. Yeah. So this will involve a lot of aspects that we have discussed so far. Let's try to discuss all of them. Okay, so you can just move to page number 3.73. And let me just also get onto this document first of all. All right, so let's move to this case study 1. Okay, so let's discuss this. CA Paritosh is auditor of a company. Financial statements of the company have been received just now for the purposes of audit. Okay. Following issues have been flagged pertaining to the financial statements for the purposes of risk assessment. Yeah. Revenue of the company has fallen from 50 crore in the last year to 5 crore in the current year. Can you see a significant change? Due to the lack of demand in the market for the products of the company. Due to advent of new products in the market, companies' products are fast becoming outdated. A large customer having an outstanding balance of 5 crore has failed to pay to the company despite efforts made by the company. So recoverability is a concern. Inventory holding period has increased. So earlier the churning ratio means inventory was kept on an average for 30 days. Now the company has not been able to churn the inventory. So it's been significantly increased. Okay, so it's 90 days now. Okay, company also gets carried out job operations from the third parties. Therefore, parts of inventories are lying with third parties. Okay, so now these issues have been flagged in relation to the risk assessment. Now, I'm just hoping you have understood the fact pattern. Huh? Now, on the basis of this fact pattern, you are required to answer all of these questions. So let's look at the first question. Huh? Regarding the drastic fall in the revenue of the company, which of the following you will call as an audit risk? Fall in revenue would result in fall in profits for the company. Drastic fall in revenue may imply company is not able to carry out its operations in foreseeable future due to the lack of demand, and there's a going concern issue. Company can explore some new line of activity if demand of its product is falling. Fall in revenue would mean lower tax liabilities. So which out of this you will call as an audit risk? I think it's quite simple for you to answer, but my request, please don't look at the solution. So if you are following the study material, please don't look at the solution. Try to answer this on your own. Yes, over here, which of the options you will find to be correct? Yes, quickly. Dilip says D. Nitin says B. Damasai says B. And Damasai has also given example of a company. He says Nokia, for example. Okay. Aditi, Tejaswin, they are saying B. Anirudh says, sorry, Tejaswin says A. Anirudh says B. Arun says D. Now let me just discuss this. So in these sort of options which are available to us, do you find option A, C, and D to be a risk for the company? Not at all. What do you mean by risk? Please go back to the concept that we discussed. Risk simply means what can go wrong. So when you talk about A, C, D, will that be the risk which the auditor will assess? No. So what should be the right answer? It has to be B. Yeah. And I think this is exactly the answer which I have received from Vaishnavi, and I think Malappa, Niketna, Nancy. Great. Okay, so let's move on to this next question. Question number 2. Companies' products are getting outdated in the market. Which of the following is an audit risk? Company should devise strategies to sell products in the market. Inventories may be understated in such a scenario. Inventories may be overstated in such a scenario. Company should launch 1+1 free offer for its customers. Over to you. Tell me. I would say these are very, very simple questions. And this is exactly what you should expect for yourself. Yeah. So you can just think about it. What is an audit risk? Dilip, Anirudh, they say C. Nitin says it should be A. What about others? Quickly, I can see a lot of you answering C. Anirudh, Mehak, Tejaswin, Vaishnavi, they are saying C. Ratimalini says A. Okay, now in this case, if the company is devising a strategy to sell products in the market, is that a risk? Will you say that this is something which can go wrong? How come this is a risk? What could be a risk? That the inventory can go down or go up. So that's why it could either be B or C. But in this situation, when the product is getting outdated, so can the inventory be understated? Obviously, no. The risk will be that the management may manipulate by overstating that. So that's the risk. Yes or no? Yeah. Okay, great. Moving on to the next question. A large customer has failed to pay to the company. Now, in this relation, what should be the risk? What should be the risk? The receivables may be misstated if recoverable debt is not written off. Receivables may be overstated if recoverable debt is not written off. The writing of irrecoverable debt would impact profits of the company adversely. Failure to recover outstanding debt would impact cash flows of the company adversely. Yes, tell me quickly. In this case, what do you think will be the right option? Dilip says it should be B. What about others? What about others? Okay, Nitin, see, they are saying B. Anirudh says A. Afzal says D. So in this case, see, if the recoverable debt is not written off, then what could be the risk? Can the receivable be misstated? Yes, of course, yes. But how will that be misstated? By overstating. By overstating that. So that's why in this case, what has to be the right option? It has to be B always. You can always say that A is also the correct one, but the more appropriate one is what? B. Understood? So that's why what should be the right answer? B. Okay. All right. So let's pick up the next question. Question number 4. You are required to identify audit risk when the inventory holding period has increased from 30 days to 90 days. Tell me. There is a risk of overstatement of inventories. Risk related to existence of inventory. Risk that slow movement of stocks would increase tax liability when the GST rates are increased. Risk relating to holding and storage cost of inventory. Over to you. What do you think will be the risk which you will consider as an auditor? Nitin says A. Okay. Tejaswin says A. What about others? Quickly. What about others? Aditi says D. Dilip says D. Anirudh says C. What about others? Tell me quickly. Quickly. Okay, great. So Damasai, Malappa, Ratimalini, they are saying A. Of course. See, the right answer has to be A. Why? Because in this case, when the inventory is getting piled up, yeah, so the provision for that should be created. But the management may not provide that, thereby overstate the inventory. So that is the risk. Existence will not be a challenge. Why? Because inventory is always there. Slow movement will not be a challenge. Why? Because that is something which is visible. Yeah. Holding and storage cost, that is not a risk. Because if that will arise, that will get recorded. What is the risk? Overstatement of inventory. Okay. And I think same is the response from Sandhya, Vaishnavi, Niketna, Nancy. Great. Okay. So last question. Then I'll come to your queries also. Part of inventories are lying with third parties. Identify the audit risk which is involved. Risk that third parties do not manufacture according to specifications of the company. Risk that by getting the job done from third parties, company is increasing its costs. Risk that sufficient appropriate evidence would not be available in respect of quantity and condition of inventory which are lying with third parties. Risk that sufficient and appropriate evidence would not be available for quality control in respect of inventories lying with third parties. What do you think is the most appropriate option out of these four? Over to you. Nitin, Damasai, Tambeshwari, I think everyone is bang on. C. What about others? Quickly, huh? Quickly. What is the right option? What is the right option? Anirudh says C. What about others? Quickly. Tejaswin, Dipali, Vaishnavi. Very good. Huh? So I think you are very clear on this. Yeah. So it has to be C. Yeah. And why C? Because if the inventory is lying with the third parties, it may happen that its quantity is not known, its condition is not known, and which may result in the loss of inventory to the company. Okay, so that's the risk. See, every time you are the auditor or you are required to look at the perspective of the auditor, what is it that you need to think about? What can go wrong in relation to that particular transaction, in relation to that particular activity, in relation to that particular process? So that's how you are required to look at it. You are required to analyze this. Okay. So with this, we have closed our discussion and we have completed our discussion in relation to this risk assessment, in relation to this internal control, understanding, all of those aspects. And I'm just hoping that you are clear in some of these things that we have covered so far. But still, if you have got any questions, any doubts, we can discuss that. Okay. And some of you who do not have any questions, you can just feel free to log out because we are done with our discussion for today. Yeah. Thanks everyone once again for your time. And once again, I could see this wonderful participation from your side. So I think I can just move on to the questions. So I understand Sahid has a question. Yes, Sahid. Yes, Sahid, please go ahead. Sahid, please go ahead. What's your question? So I think Nisarg, maybe you can just open this audio. Huh? They can ask questions. Sahid, what's the question? Maybe he's not around. Bhavna, what's the question? Bhavna, if you are around. No. Hardik, what's the question? Huh? I understand you have a query. You have raised hands. Are you around? Yeah. So Nisarg, I'm hoping the audio is open. Karan, you have a question? Nisarg, audio is open, huh? In yeah, please allow them to ask questions. Huh? Okay, so I think Sahid has a question. Yes, Sahid, please go ahead. Huh? Maybe we can just pick up
Hello,
this
sir.
one by one. Sahid, yes.
Sir, please explain the substantive testing once more, sir.
Yeah, substantive testing means the procedures which the auditor will follow after checking the controls. Okay. Now, what could those procedures be? Those could be related to the analytical procedures, means some analysis he'll perform, or those could be in relation to testing of various information. For example, payroll records he'll obtain, salary computations he can check, yeah, appointment letters of the employees he can check, purchase register he can check, cox analysis he can do, yeah. So these are all examples of the details which the company will provide in respect of the information which is flowing into the financial statements, and which the auditor will now test. He will now examine by getting onto the computations, by re-performance, recomputations, by going through the documents, by going through the scrutiny. Okay, so a whole lot of procedures which he'll apply after this control testing. That is what you call as a stage when this substantive testing starts. Okay. All right, so I understand Bhavna. Yes, Bhavna, please go ahead with your question.
Good evening, sir.
Good evening, Bhavna.
Sir, what is narrative record?
See, narrative record means you go and discuss with the client about the process, about various things that you want to inquire upon, and you take a note of that. For example, let's suppose this class is going on, okay, and you are making notes of these. You are making descriptive notes, detailed notes. That is what you call as narrative. Okay, something which is produced by you or documented by you in a detailed manner, descriptive manner. Clear?
Yes, sir. Sir,
Okay. Yes.
explain in brief, in short, qualitative and quantitative materiality.
See, quantitative simply means you are computing an amount that becomes your threshold. So we took a lot of examples. Huh? Remember our examples wherein we computed an amount and that became a threshold for us. Yeah, that is what you call as quantitative. Now, at times, what may happen is there could be some errors, there could be some misstatements for which, if you look at the amount involved, that amount may not be very significant, but qualitatively you may find that to be very, very important, which will generally arise in relation to the disclosures. For example, KMP disclosure in the financial statements considered to be extremely important. Okay. Why? Because qualitatively it's important for the users of the financial statement. So therein you will not really go by the amount. You will go by the quality of that information. That quality is important for the users. So that's how you differentiate between these two.
Okay, thank you, sir.
Hardik, yes, you have a question?
Good evening, sir.
Good evening.
Sir, in case study 1, which we have just discussed, in
Yes,
that regarding the drastic fall in the revenue of the company, which of the following is an audit risk?
right.
So, sir, why option B? Because we have seen an inherent limitation that auditor cannot comment on the going concern of the company. Future events, he cannot comment on it.
See, it's not about commenting on the future events. Auditor is required to evaluate the risk. Now, when the financial statements are drawn by the company,
Yes, sir.
there is always a risk that going concern could be a challenge.
Yes.
And I'm just hoping you understand this AS1, Accounting Standard 1.
Yes,
What does it
sir.
require? That the financial statement should be prepared on going concern basis always. Yeah,
GAC, going concern accrual consistency.
right. So, what if the management or the company will not be able to continue for next 1 year? So, can
Okay,
you
sir.
prepare the financial statements on going concern basis?
No, sir.
But what if the management has ignored this and still prepared the financial statements on going concern basis? That means the very basis of preparation of financial statements could be wrong.
Yes, sir.
Is that something which can go wrong?
Yes, sir.
And that is something which you call as a risk.
Yes, sir.
And is this risk pertaining to the future event? No, this is something which is in relation to the financial statements, which are drawn in relation to the reporting year and on which auditor is required to provide an opinion. Understood?
Yes, sir.
All right.
Sir, I have
Yes.
one more small doubt.
Yes.
Sir, uh, in account balances, which we have seen like significant ones, significant in nature. So, sir, irrespective of significance, account balances will always be checked by the auditor.
Are you talking about the significant account balances?
Yes, and no, sir. The account balances which we show in the financial statements. For example, if we have a property, plant, and equipment inventories and other current assets or current liabilities, they are written as per the Schedule 3 in the financial statements. And these are the account balances which are draft balances which are given to the auditor for checking. Now, sir, irrespective of significance, whether auditor will check all these balances if they like calculation based and all.
Of course, yes. See, first of all, it comes to the financial statements. Huh? So, what is the responsibility? Responsibility is around the financial statements of the company. So, as around the financial statements, the account balances which are flowing over there in terms of their recognition, measurement, presentation, disclosures, all of these aspects will be looked at by the auditor. Auditor will want to review that. Yes or no?
Yes, sir.
Now, as around their recognition, measurement, presentation, there could be some challenges. Maybe PP is recorded at X amount, it should be recorded at X plus 1, X minus 1.
Yes,
That
sir.
is what auditor will evaluate further, for which he'll get into this assessment of whether this account balance should be considered to be significant or not so significant. Why? Because he will decide his procedures according. To say that he'll ignore an account balance altogether will be inappropriate. Of course, the testing of
Okay, sir.
auditor in relation to some account balances could be significantly lower, on some could be significantly higher. But of course, at least at once, he'll just go through all of them. So to say
Yes.
that he'll just leave that altogether, that will not happen. That doesn't happen.
So, sir, we can say that the significance and unsignificance concept is only for the key or critical areas of the company, and for
No,
that
it
the
applies
risk.
to financial statement as a whole. So you can just simply say that financial statements in a way is a checklist, okay, or a list of various items
Okay,
to
sir.
which auditor will do a filtration. So some of those items he'll call as significant, some of those items he'll call as not significant. And that's
Okay.
how he'll approach his audit.
Okay, sir. Thank you, sir.
Sure. I think Karan has a question. Yes, Karan.
I didn't get because of network issue. I don't know.
Karan, I can't hear you. Your voice is breaking.
Can you please?
Karan, very difficult. Maybe you can just put down your query. You can just write down your query. Your voice is breaking. Sania, can you please go ahead with your query?
Hello, sir.
Yes.
Sir, in case study MCQ 4, sir,
Case study, we
want.
just discussed that one.
Yes, sir.
Okay, yes.
Sir, I want to ask, sir, how inventory holding period increase will lead to risk of overstatement of inventories.
See, when the inventory holding period has increased, so what does it mean? That the company has not been able to sell the inventory. Yes or no?
Yes, sir.
Yeah. So, in a way, you can say maybe it's becoming obsolete day by day, or it's slow moving for that matter. So, there is a chance, or there could be a requirement to create a provision for that type of inventory. Yes or no?
Yes, sir.
But what if the management has not created that provision? So there is a risk.
Yes, sir.
There's a risk. And this risk is what? Means management is overstating the inventory by not creating the provision. Okay, and
Okay,
which you'll
sir.
generally find. Whenever you will come across these situations, you'll generally find these type of risks. We are not saying that the management will always do this. We are saying this risk will be there. So that is what the auditor is analyzing. So please remember that every time we are talking about a risk, it doesn't mean that such error has already taken place or will take place for sure. We are saying that it can go wrong. Whether it goes wrong or not, we don't know. We need to find out. But we need to check by taking that perspective. Yeah, this is something which can go wrong. Okay.
Okay, sir.
Then I think Kasak has a
Am I
question.
audible,
Yes,
sir?
Kasak. Karan, yeah, you're audible. Yes.
Can you please send materiality once more because I can't get because at that time network so much.
Karan, again, I think maybe there's some network issue. Your voice is breaking. I would advise you can just put down your query. Yeah, so you can just put down your query and I can just read your query and respond to you if I am audible to you properly, because I understand there's some network issue at your end.
Sir, can you explain timing to test of control?
Timing of,
Timing of test of control.
see, timing of test of control will always be once you have done the evaluation of internal controls, something which will go on at the planning stage. When you are doing your risk assessment, when you have looked at the risk, you have identified the risks. Okay, when you have understood the control system, after that you will want to check whether those controls are operating effectively or not. So that's when you will get on to the testing of internal controls. You can always pick it process by process, but generally the audit team will go to the client place and they will simultaneously start the control testing for various processes. So practically this is how it works.
Sir, in this study material, in this study material, where is this? I don't found it in this book.
What did you not find?
Material.
Material means materiality.
Yes, sir. Sorry, sir.
So you're saying this concept materiality you have not been able to find.
Yes, sir.
Okay, no worries. So it appears you have not gone through this document properly. Maybe you can just go refer page number. Let me just go through this document now. Maybe you can just go to page number 3.16. Okay, that should help you. You can just make a note of this 3.16. Okay,
Yes, sir. Yes, sir. I found
that
that.
is where it starts.
Yes, sir. Thank you, sir.
All right.
Good evening, sir.
Good evening.
Sir, in question number 5, MCQ, in the case study that we have just done, it is
Yes.
mentioned quality control in with respect of inventories. So
Right.
what is
See, quality control means every organization will have a process to ensure quality of the work. So let's suppose if you are required to say, let's suppose you want, so let's suppose you go to a tailor, okay, and you ask him to stitch something for you. Yeah, so this is a job which you have assigned to a third party. So in this respect, the quality is something, if let's suppose you want to ensure. Why? Because let's suppose this is your business. So every time you receive an order, you pass it on to a third party. The third party will complete that order for you and you will sell it, or you can just maybe, give it to the customer. Okay, so what is the quality control, or what is the mechanism which the company has set up to ensure quality in respect of that? That is what you call as control to ensure quality in relation to performance of that job.
सर देन इट इज मीन दैट द मतलब कि वो जो इन्वेंट्री है हमारी उसके क्वालिटी को चेक करना
नहीं, उसकी क्वालिटी को नहीं चेक करना, उसके प्रोसेस को भी चेक करना, मींस हाउ दैट इज गेटिंग डन, एंड ऑफ कोर्स उसकी आउटकम को भी चेक करना. सो इट हैज टू बी अ मिक्सचर ऑफ दीज टू. सो एंटायर प्रोसेस, okay, whether this process is going through in an appropriate manner or not, so that the outcome is meeting the desired levels which has been set up, whether that is in place or not, usko check karna. Okay,
ओके सर थैंक यू सर
sure.
Sir, where we can put our queries because chat box of Zoom app is disabled.
So I think it's Karan, you again.
Sir, he is asking that where he can put the query because chat box is disabled.
No, so I think on this portal, so this link is available. You can just go there and put across your question over there.
And in live class also, sir, when you are asking question, we can give answers for that. Or is there any other?
Sir, he is saying
Alright.
that whether we can give answers on that area, portal and all. He is asking technical because he is not able to find it. He is
So
asking.
I think Karan, maybe you can just reach out to the administrative desk later on. I think this will be something over which they will be able to guide you, help you. Yeah, maybe Nisarg, Ajit will be able to guide you later on. Yeah, because this is more of administrative in nature. Yeah, you need to understand there's a link through which you can just access the portal, and every time you have a question, you can just put across your questions over there, and that is what is reviewed, and accordingly those are answered. So maybe you can just go through that. All right, anyone else? Any more questions if you have? So if you are done, I think we can close our discussion. All right, so I think Ajit, Nisarg, we can close our discussion. It appears we are done. There's nothing more as far as the queries are concerned.
Thank you so much, sir.
Thank you.
Thank you, sir.